Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
Welcome back, everybody. As promised, here's the bonus session with Joe Downs. Hope you enjoy.
So, I'm interested to hear, we've talked several times about the relationship and business of what we do. You and I were talking some prior to getting on air about that. And now we're talking about how we're turning the storage space and how it's really about how you're interacting with that client from a digital perspective. So I'm curious to see, because I'm seeing storage facilities go both ways to where they've still got people that are on-site managing. And I'm seeing a large trend that have no person on site full-time managing, no one living there, no one doing any of the old school stuff. What have you guys found? And do you see that differ from geographical areas from one to another?
Yeah, good question. I don't know if the only geographically is interesting. I'm coming to that one first. Maybe slightly. Only because of snow is the only thing that's coming to my mind. But I'll come back to that. For the most part, geographically, no. For the most part, I'm gonna say geographically, no, because even then you can have this snow cloud. No, it has more to do with the type of service you have. So you might have no service, right? No services. I'm just drive up storage. You can access 24/7. And there's no climate control, nothing, whatever. That's what we're operating. That's most of ours, by the way. And we're operating that in what we call hybrid management styles. So we have a roving manager. They'll be there 1 or 2 days a week, and then they'll move to month. They'll move to another facility. And then we have the ability to have local boots on the ground anytime you set up a contract with, usually we use law enforcement or firemen, because they work those odd shifts. They usually have time off. So if you need a unit cleaned out or you need something, we're relying more on a local boots on the ground. So it's kind of like a hybrid management structure, which is incredible for cost savings. And then we said, well, what if somebody has a question or a phone call? Well, get a call center. So they can call the call center anytime. And down the line, that'll all be AI driven as well. So they'll be able to talk to somebody like they're talking to a live person. By the way, I've talked to live AI agents before. It's incredible. You do not know the difference.
Yep. You
have to try to trick them into asking a question they can't answer so you can see, is this a real person or an AI agent? Anyway, that's how good it is. Where you were seeing what you described has to do with either the service that is available at that facility, and I'll give an example in a second, or the size. So certainly at 100,000 square foot, 4-story building, which a REIT probably owns, or some institution, they're likely to have a full-time and even a full-time and a half employee. So maybe they have 2 people there on weekends, right? And that's partly because of the size and the sheer volume of people that might be there at one time. But then there's also little things like, hey, in a building, you have elevators, you've got carts. It's still self-service, but there's components involved. There's no component involved when you pull up to your car, to your unit in your car, and you get out in your truck and you unload and load. The only service involved, the only thing we control there is, did you get in or out of the facility, right? You're controlling your door yourself, right? So there's less that can go wrong, right, from that standpoint. Or like I mentioned, you have a service. So we have a facility in upstate New York. And back to our Army theme, it's right outside of Fort Trump. And we park cars for the soldiers. They store their cars with us in a warehouse. It's more like a valet service. So they're parked in there like Tetris, right? and we start the cars for them. I think it's once a week, or it depends on the weather. I forget the cadence, but we make sure, especially through the winter, when, it's -50 up there or whatever it gets to, where engine blocks will freeze, we make sure their engines aren't freezing and cracking. They may even drive them or something. I don't know what they do exactly, but we have to have employees for that on staff. But that's built into that model. Most of what we do, we don't have an employee at all. We have one manager, and they're roving, and we have local boots on the ground, and they're as needed. Or it depends on the relationship. It's a little different at every facility, but it's mostly on an as needed basis.
Okay. How are you finding that you guys source most of your deals then?
Oh, great question. We have had the best success with what I'll call off-market deals. So cold calling, off-market deals, cold driving, I guess. Just walking on the lots. Old school, right at Glengarry, Glen Ross. Just walking on the lot.
Yep.
And we've bought probably a third of it. We've acquired 20 facilities in 6 years, and maybe I'd have to do it. It's either 5 or 6 are from brokers. Most are off market.
Wow. Okay. So when you buy your deals, the way you're set up now, and I think part of this, because I want our audience to hear, like, hey, where do they need to be before they can start to look at self-storage, right? If they're working 3 jobs and trying to figure out how to reinvent, is self-storage a game they can get into, right? Or what do they need to do to that, or to do that, to accomplish that? So are you raising capital? Are you buying them yourselves? Are you putting them in with a REIT? Are you JVing? What's the methods that you guys look for?
Yeah, let me give you different examples of maybe your what your audience might be like, right? So you have people out there who are like I was, reinventing, broke, no money, working 2 jobs, and on the weekends out looking for deals, right? That I wish back in 2003 or 2, whatever it was, that I had heard this podcast. Because the answer is yes. You can spend your time driving on weekends. I would have, 2003 Joe would have heard this, and instead of gone to look for single families, would have gone driving onto storage facility lots to talk to owners and find out if and when someday they're going to sell or be interested in selling. I'd be making relationships with those people. And the reason is, even if I have no money to buy, because there are tons of buyers out there. The hardest part of this business is finding a deal. And a deal is not a facility. A deal is a willing seller with what might be a deal for the right buyer. And I say right buyer, meaning depends what your capital stack is, right? So, Craig, you might be able to offer $100,000 more on a deal than I could, just because we have different capital stacks, and that's okay.
Sure.
My point is, when I say a deal, it's a willing seller with a deal that's a deal for somebody, meaning it's financeable or tradable within reason, right? Not, I'm a willing seller and I want 10 million and it's worth 2. That's not a deal. So that's the hardest part of this business, is finding them. And we do it by making relationships. And sometimes it takes a while. The last deal we just closed I started 3 years ago. I walked on the guy's property. So sometimes it can take time. Sometimes you strike or you get lucky. It's lightning in a bottle. But if I was out looking to make money, that is what the first thing I do, because you can wholesale those deals. You find a $800,000 deal, but you can't buy it because you have no money at all. That's a $50,000, $60,000 wholesale fee right there.
Yeah.
Worst case, 25, 30. That's not nothing.
Yep.
Let's say you find that deal and you got a couple $100,000, right? You've been in business or you're looking to get into real estate. You find the same deal. Let's say it's 700,000. We'll pick a number. You get a wholesaler for 50. That's wonderful. What's unique about self-storage that is different from most other commercial real estate asset classes, and I love them all, This is not a knock. This is just highlighting something unique about self-storage. It is a business, and therefore we qualify for SBA loans, small business administration loans. That means if I do have some cash, let's say I've got 200 grand, and I'm looking at small multifamily or a package of single families or whatever, might I consider self-storage? Yeah, I might, because that $700,000 acquisition, if I used an SBA loan, I'm only putting 10% down. I'm getting 90% financing. So 10% down, that's 70 down. I roll in my closing costs. Maybe I'm at 100, 110, somewhere in there, 120. I've got some CapEx. I've got cash to operate this facility, and I have cash left over. I don't even need 200, right? I feeling pretty comfortable. So that's a unique opportunity. Or if I don't have 200 grand and I need to raise it, I can put together a deal using, an a 506C or a 506B offering memorandum. I can still use the SBA debt, and I can raise the 150 or 200 grand, whatever it needs at that point. I mean, it's gonna be a little more expensive because you just added some legal costs to it, maybe another 15, 20 grand, but I can still get the deal done. So there's any number of ways to take down that deal if I can find it. And I don't have to take it down. I don't have to buy it. I can wholesale it. And there are plenty of buyers. And I personally, my company would be happy to help you. And we might even be your buyer. Who knows?
I mean, listen, I could sit here and talk about this all day, but I got to respect your time as well. So I got probably 3 questions left I want to ask. There's a lot, especially right now with, we talked about the markets, what's going on with the markets, everybody trying to read them, that whole process, right? And then everybody's talking about the real estate market as a whole, where it's going, what's going to happen. What do you see happening with storage, and what do you see as the future of storage?
Well, that's a great question. We have a housing shortage of 4 million units, I think, consistently for the last 7 years and projected for the next 10. They're continuing to, which tells you that it tells you about housing storage, right? So it speaks a little bit about our population, right? And our population trends, right? We grow at 1% a year. That's a lot. Storage development does not grow at 1% a year. The last 4 years definitely let in about 1% a year, I think, each year. So our growth rate for the last couple of years has doubled. And I don't think I'm not getting political, I'm just speaking logically here. I don't think even if there's any success of mass deportations, it puts a dent in the number that is here to stay. So, and that's the number that they count, right? Who knows what the real number is? So you had an unnatural influx of people that puts pressure. By the way, that's not even included in the $4 million housing shortage. So you're going to see, no matter what, tremendous growth in housing. The way they're building these houses, these multi-families, and I think even residential units, they're all getting smaller. And you guys might know that, right? Not just total square footage, but even your storage, your closet space, everything within your units in these buildings are all getting smaller. So, I mean, that's hand in glove with storage. They're not only is the growth rate, the population rate in our favor, but so is the way they're solving the housing problem, right? So, and then on top of that, interestingly enough, I'd mentioned I'm 51. I'm Gen X. I'm eyeballing you, Craig, roughly Gen X as well. I don't know about you. Like I said earlier, I've never rented storage. Our generation is the smallest generation in the last 4 generations.
Yep.
We are not the best for storage. The greatest generation is the baby boomers and the millennials are huge. What's unique about the millennials and our generation in particular is even if we were bigger in terms of population, we still would be a smaller percentage users of storage because of how we grew up. We don't believe in it as a generation. And it's okay to say it out loud and admit it being in storage. I have an attic, a basement, a garage. If I need storage, I personally think I have a hoarding problem. But that's just me. There, right. 10 to 15% of my generation disagrees and they use storage. I mean, look, some of it is they need to. And by the way, I'll use storage, I'm sure, someday if we get jet skis or something. And, it'll be for discretionary, vacation use. It won't be for my day-to-day use. Or maybe I'll use it for moving. Who knows? But more importantly, the millennials, which is the next largest generation to the baby boomers, they not only use it, they expect to use it. So they're using it at 30%. 30% of their generation is using it or expecting to use it. The generation after them, was that Z?
Yep.
They're projected at 50 or greater. They just see it as part of having a cell phone, right? Everyone has a storage unit. It's just part of life. So what do I see for the future of storage? I see the future of storage being phenomenal. And the time to get in is now because of what's about to happen in the next 10 years. There's 2.4 million businesses that will change hands in the next 10 years, cash flowing businesses. And at least 20,000 of them are storage facilities because they're all owned by people 65 years and older. And by the way, if you ask me, we buy most of these deals, these 20 deals. If you ask me the average age of, I'm shooting from the hip, it's just spitballing, but I'd say the average age of our seller is like 70, 71 years old.
Really?
That's
an interesting metric. Yeah.
So it's a really interesting time to get into storage. Do we have cycles? Sure. Our down cycles are nowhere near. We've got the data to prove it. The down cycles are nowhere near anything else. They're okay. In fact, I think we just had our worst 2-year run ever because we came out of COVID in a stagnant environment. Real estate market wasn't down, but transactions were. And transactions really are important. That's a bread and butter piece of storage. So if you think we're headed into a slowdown in real estate transactions, then I would expect storage to slow down again. But that's really it. Every other factor is wind at our back.
I'm going to finish up. Last question for you of real substance of anything is, it's one that I really ask everybody, right? So what would you tell brand new investors?
There's a ton of information out there on storage. There's podcasts. If you're interested in storage, I would stay with this podcast if you're not looking for storage. But, and by the way, let me commend you, by the way, because I've said it twice now. We didn't have podcasts 20 years ago. So thanks to guys like you, Craig, who are taking your time to interview, you're interviewing me about storage, but I'm sure you've got guys on talking about other real estate asset classes. What a tremendous service, true public service you're doing for the entrepreneurial investing world, because we didn't have it. And, the advantage that you have by listening to your podcast every week or every podcast you put out, whatever the frequency, you're just so fortunate today to have it. But so keep listening to these podcasts is number one. But there's information out there, but storage is a business, so I would highly recommend. I mean, you're welcome to reach out to me. I'll give you my contact information. But I would seek out if you're interested in storage, I would seek out the Scott Myers Self-Storage Academy. They're teaching people the business. They taught me the business. I actually teach there now. And we offer mentorships, and then my company actually does the mentoring, the training. So I love it. It's great to give back. I love the questions that are asked, because I haven't been doing it for 30 years. I've been doing it for 6, and I remember those questions because I had those same fears, doubts, questions, everything. Look, the first deal seemed like Mount Everest, right? And I tell people when I stand on stage, when we open up the academies, and I go up and I do the opening and I welcome everybody, and I say, I was sitting in your seat 6 years ago. I remember vividly what's going through your head right now and what's not going through your head, right? What you're about to learn, you're about to drink from a fire hose. And I tell them that, and then I don't think they get it. And then 3 months later, when we're mentoring, I'm like, remember what I said? It was me feel like fire hose, like starting to ease off a little, isn't it? You're starting to get it. But at the same time, like, I'm not launching rockets into space or catching them, as my new favorite thing to say. Now, I'm not catching rockets from space anymore, or these days. So I'm not Elon Musk. I'm not this brilliant guy. I'm just a little grit. All I need is a little grit and a little desire, and you'll figure it out. This is it's real estate, but it's obtainable knowledge. It's obtainable. Buying a facility is obtainable. All of this is obtainable, even without money. It just takes a little some time, some desire, and some grit.
Joe, I appreciate you. I appreciate you being willing to be on today. It is a wealth of information that you've given. It's been a pleasure to learn more about you, but also for the things that you pour into our listeners. Again, whether it's for the seasoned investor that's got 30 years in this industry or somebody just starting, right? So I guess the last thing is, for anybody that's listened, if they've got questions, I know you're with Scott Meyer's Academy.
Yep.
How can they reach out to you? How can they reach out to Scott Meyer? How can they get involved to get more questions answered about the niches that you look at, as well as just storage as a whole? Yeah,
would love to. First of all, you can email me directly, joe@belroseam.com. So that's BELROSE, A as an asset, M as in management.com. Our website is belrosegrp.com. Belrose Group, which is belrosegrp.com. And then if you Google Scott Meyer's Academy, I don't have like a handy jingle to give you, or you if you Google it, or just email me and I'll quickly make the intro over there. Would love to see you. I think our next meetup or next academy is in Seattle, Washington in August. Love to see you there. It's incredible. It's just there's a ton of information you get on the internet, but it's the type of thing where you really want someone to show you. It's like you wouldn't climb Mount Everest without a Sherpa, right? And this isn't Mount Everest. It just feels like it right out of the gates. I can't believe how incredibly easy it was to get into our first one compared to what I thought it would be.
Well,
relatively, it was like walking, and I thought it'd be like climbing Everest.
Well, Joe, man, listen, it has been a pleasure. For everybody listening, I can't thank you enough for being on today. If you got any questions, reach out to him, reach out to Joey. We'll make sure and get you in touch. Until next time, we'll see you soon. We look forward to seeing you. Thanks again for joining us today.
Thanks, Greg.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the hard money tab.